that's the underlying and the fundamentals. The other big part of the equation is what's happening with central bank stimulus and interest rates, where we thought they couldn't go lower. They found a new low here domestically, and there's all sorts of stimulus being pumped into the economy from offshore. How does that, as a value-focused manager, knowing what was happening in terms of momentum and growth in the market pre the COVID crisis, does that trend start to emerge again? Does that factor into your thinking?
Yeah, so that's why it was really important at the early phase of this to make be aggressive when the opportunities presented themselves in March, especially in March, is because at the back of your mind as a value investor, you know that the central bank's sitting there providing stimulus and people are using any valuation methodology to justify anything, and you can, so to speak. It doesn't mean it's the right investment, but that's what was going on. So as a value investor, pulling the trigger when the opportunities are in front of you, when you thought things were trading at a 50% discount, you had to act pretty quickly. So we're of the view that we've done enough in that we've bought the right things at the right time, that it should outweigh those elements, and that there are going to be some winners. There are going to be some structural winners out of this and some structural losers. And as a value investor, for us, more importantly, is to try and avoid the structural losers, because you get attracted to valuation, and then occasionally you buy things where the earnings go backwards for the next 10 years, but the multiple's the same. And that's usually for a value investor, you've got to try and avoid that sort of investment case, because it can be quite devastating to your portfolio. But we're of the view that we've sort of positioned our portfolio in two distinct camps: those long-term winners that provide a real short-term opportunity to get set, and some of the deep cyclicals where you're going to get a recovery and the market was overestimating how bad it was going to be.